U.S. banks are reporting tighter credit standards and softer loan demand. That's according to a Federal Reserve survey out yesterday. Let's bring in now Yahoo Finance's David Hollerith to discuss more. David, the details, please.
Hey, Jared. So the Senior Loan Officer Opinion Survey, or SLOOS, has gotten a lot of attention lately. What we've seen from the second quarter, the results showed yesterday, is that banks continue to tighten their standards for making loans to businesses and consumers, and they expect to continue to tighten those standards for the rest of the year. Now, this isn't a huge surprise. It's largely what we've seen in earnings from the larger banks over last month. But it is important, obviously, as you know, Fed Chair Jerome Powell did speak to this yet last week at the FOMC meeting, and he, pointed out that conditions are tightening and they should continue to tighten. And banking credit, bank lending is sort of one kind of partial indicator we can use to gauge a recession. So from the survey, the share of banks that said they're making it more difficult for consumers and businesses to borrow money is still growing from last quarter. That's sort of the main takeaway. On balance, standards have tightened across most businesses and consumer loans or consumer lending. And that's outside of demand for credit card, which has remained unchanged, or I guess you could say pretty resilient from last quarter. Now, on the tightening standards, looking to the end of the year, the banks cited an uncertain economic outlook, deteriorating credit quality of their loan portfolios, concerns about bank funding costs, as well as deposit outflows. Some also said that they're anticipating the new rules, which were proposed by regulators last week, may also restrict future lending. So again, slowing bank lending can serve as a recession indicator, but it's not always a clear one. And the broader economic implications of this could potentially not be felt for at least a year and a half. So it's a very slow moving thing we're looking at now.